This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, everybody, and welcome back. We're going to talk about the market today, and I want to discuss something that I think is taking place, just generally speaking, and has been taking place for quite some time. It's really what's been missing that's would cause the market to decline. And I'm going to go through, I'm actually going to go through a number of different indices with just the weekly and the daily today. I'm going to start out looking at the market conditions and run through that fairly quick. And then we'll go through the other indices. So let's get going right away. We've got the conditions up here. So one of the things that I think stands out is we look at the trend and then the slash and then momentum, and we've got the monthly, weekly, daily, hourly, and then a slash and then monthly, weekly, daily, hourly. Well, this over here where there's blanks underneath here, that is the momentum conditions. So we're in uptrends, but we're lacking really momentum that I would consider to be, stellar. So I'm going to get into that a little bit more in depth in a second, but let's just talk about the volatility, because I think there's some implications here that could be important coming up over the next few days, actually. So this is the chart that I use for this indicator, and the red line is the average true range of the S&P cash index on a daily basis. And so it's giving a 20-day, basically how much volatility there is on a daily basis, looking on a 20-day average. And then I do an 18 MA in blue and get a pretty good idea of what the trend of that volatility is. And if you notice what's happened recently, where the volatility has started to increase and the moving average has turned up, when that takes place, that means that risk levels are elevated, and there is more risk in the market. Now, one of the things that I think is important, and the reason why I think we need to watch this right now, is we have this moving average turning up. What we're looking for is for this to hold and turn up and make another higher high and kind of shift that trend around. If you notice, this was just one leg up pretty much. This made one leg up, kind of pulled back a little, and then came up, but then came down. What I'm looking for is up, and this would be a second higher high, second higher low, holding the moving average most importantly. And the fact that we're holding right now, we're pulling back to the moving average. I mean, if we come right back down through the moving average, I would say that this is just another small blip in the volatility, but not a true turn. If we go and look at, in fact, let me just look at this weekly real quick. The weekly volatility really isn't changing much. We're going to need to see this pop up as well. We've made a move to the upside, and now we're making potentially a higher low. If we turn up from here, we make a higher high after the higher low, and that might increase the odds that we're going to break through this moving average. But these are the types of things we need to take place if we're expecting anything important to develop in the indice. It's very difficult for the market to do anything meaningful without volatility. I mean, to the downside. So it's just something we want to be on the lookout for. Let me just show you. I'm going to go back to where the market got hammered. So this was at the peak in 2020 when the market got hammered. Look at what the volatility did. It held the moving average there, but it wasn't rising yet. And then it rallied up and pulled back to a rising moving average. And look at the drop that followed. So I'm kind of on the lookout for something along those lines to just sort of prove that we have a real shift on our hands, and we just don't have it. And one of the reasons why I believe is there is a lack of sellers. I'm going to get into that in a second when I go through the trend and momentum. Overbought, oversold. So we have moved up a little bit more on the weekly RSI 5. We're getting up towards the 80 area, which is a little bit more overbought, a little bit more dangerous, but nothing really significant taking place there. And sentiment didn't change this week. So let's look at this as a 2-time frame of the spider right now. I'm going to go through a couple different indexes pretty quick. We still have the condition in place where the 18 is above the 40 and both lines are rising. And every time we pull back near this 18 week, it's finding support. Now, these were a little bit deeper, but it never broke that moving average, what I would consider to be a true break. And position is in pretty good a spot, I think, just based on the fact that they're rising at about the same rate. What's bothering me, and what I've been saying now for about 3 or 4 weeks, is the fact that the MACD is diverging. And look at the ADX, it's still dropping. And even though price has gone to a significantly new high, we failed to make a new high at 25, and we're actually dropping from here. So this is putting itself in a pretty dangerous position. What's missing right now is sellers. So let's just evaluate. I want you to look at the weekly ADX and what's really taking place here. Because green DI, which represents the strength of the buyers, has dropped down under 25. And it made a lower high here, another lower high here. It hasn't taken out the lows, but it failed at 25. So once I see the buyers under 25, I know the buyers are not that strong. So it's not like people are going crazy buying. But what's really missing are the sellers. This has been down and low for a very long time. We're just missing any real strength in the sellers. And for the market to turn and have something meaningful to the downside, you're going to need to see strength in the buyer and the sellers to cross above the green DI and cross above 25 and really get this to cause a shift. It just hasn't really taken place. That would likely coincide with the break of the 18-week. If we started to see those type of conditions, then we have to start getting worried about something a lot more significant. Right now, as long as the sellers stay kind of weak, we have to assume that the 18-week is going to hold on every pullback. So these are the types of things you want to be on the lookout for. Let's go to the QQQ. So this is a little bit different because if you look at what the green DI has done, it made a higher high. So it came down here, it dropped down under 25, and now we've made a higher high. There's definitely improvement in the buyers here. Now, ADX is still really low. It hasn't gotten above 25, but I do like the looks of this green DI a little bit more. We're going to need to see this get back above 25. Right now, it's at 23.5 on the ADX line. But look at how weak the sellers are. And until we see a change in that, again, I don't think we should be on the lookout for anything significant. I think there's pretty good support, as I mentioned, down around 345. If we happen to get a pullback towards the 18-week, I think that's somewhere in that 343 to 345 area is where support is. The IWM represents the small cap universe on the Russell 2000. And if we notice, I mentioned if you looked at my prior videos, these spike downs under, down in this zone here where you can see these wicks develop on the candles. But by the end of the week, we're rallying back up. There's a bunch of these. This time, it actually came down and closed down there, closed here, and then had a open to the week. And by the end of the week, it had come back up again. So there's still pretty strong support here. But what I think is taking place is the 18 is trying to get down closer to the 40, and the MACD is trying to get closer to the 0 line. And I think we need to be patient and wait for that. I think that'll provide the next real buying opportunity in this area. And we want to be a part of that, I think, because I think there'll be pretty good upside when it gets going. So the Dow Jones represents a lot of the value in areas, basic materials, financials, industrials. A lot of those are going to be represented in this index. And if we notice what's taking place here, I think it looks pretty interesting because not only are we holding the 18-week, but we have pretty good condition in place on the ADX. Now, green DI has dropped down below 25, but we had a nice reading to the upside on the blue line, the ADX line on the way up. And so I think that represents pretty good strength in the buying power on that move to the upside. So I think this is the index of the bigger indexes. I think this is the one is in the best shape on the weekly chart right now. And if you go and look at the indices, or I should say the ETFs for XLB, XLF, XLI, even XLE, all of those areas that represent sort of value, I think are consolidating in a very healthy manner. Crude, I put up this red line to show where resistance is or was. It rallied up into that area, kind of pulled back, but it found support at the 18-week. I'm sort of encouraged by what's going on here. Now, I do think this is going to take more time. I don't think this is just going to go blowing through that area, but I am kind of encouraged by the support underneath. And I do think ultimately this maybe wants to carry through that resistance area. Gold also should be discussed a little bit because we're starting to see signs, pretty good day today, starting to see signs that maybe this wants to start climbing. But I want to see green DI kick in on the weekly. It hasn't even kicked in on the daily yet, but we want to see those climbing back above 25 and showing sign of real strength. I do think there is resistance for the gold futures up there, 1850-ish, something like that. So that's something to watch and see if we can get through there. But some signs of encouragement here based on the way things are trading. So the TNX dropped down below these key levels I had mentioned before. Now we've dropped down and getting down into support. I think what's going to end up happening here is we're going to form a range probably between the rates being somewhere around 105 to 115 being support and resistance somewhere in the 140 to 150 area. And I think we'll just trade in a range for now until, MACD is starting to work down towards the zero line on the weekly chart. So maybe a little bit more time. And this could set the stage for another turn to the upside. But based on the way this came down and the break that took place of this key level, I wouldn't expect anything significant to the upside right away. Finally, let's look at Bitcoin, probably the most volatile index or market that I've ever seen, especially since October of 2020. It just keeps increasing and getting kind of nuts. I had talked about the 30,000 area. It came down. It actually closed below it one day, but there was no follow through and it instantly turned on a dime. I think it caught a lot of people looking at this 30,000 mark. And that's what you're kind of dealing with when you got a lot of volatility and a lot of eyeballs. You got to sort of expect people to get whipped around a little bit. Now, we're coming into a declining 18 week. So I expect this to kind of maybe run into some problems and then make a higher low. If it's going to survive, it'll make a higher low and then turn up. If that happens and gets up through the 18 week, probably take about a month to 6 weeks to play out that way. But if it does that, I think this could look a lot more attractive. That's our update for the week, and we'll see you next time.